we have on our board. So we will write here to be what? So we will write graph 3 column. How many is this? Move. We have 3 column. Or the month and what's what's the date on our question? We have now let's read our question. Williams is a petty trader in Idumota market in Lagos. His transactions are carried out both and through the bank. Daily cash payments are made from cash sales, and any surplus cash thereafter is into the bank either on the same day or days after. Now, the following transactions were extracted from the book of Williams in the period. So we have January balance at bank. We have January 1 balance at bank. January 1 the same day drill and cash check for 50,000 naira. January within bought 40 goods for naira cash. Then January C. Okoli paid on 10,000 check on account. January 5 for cash to two customers at 3,006 and 3,003 respectively. January 5 paid Abiba by 2,000 less 5% discount. January 10 we have cash sales 7,000. January 12 we have H Morgan paid check on amount on account 28,500 after deducting 5% discount. Then January 14 we have paid carried in cash 3,300 paid sad by 8,000 it's no discount of 300 issued to non-account naira sales for the week 39,000 naira. January 20 David paid 25,000 naira by check. Paid cash into the bank, leaving a balance of 15,000 naira. January 21 purchased on cash 7 packets of office pin at 700 packets. 22 paid cash bank 10,000 naira. They are now required to prepare three-column cash book, the above record. So here we want to use this question. Both three will lead to activity, which is balance. Before we try for the month. Now let's go. Let's pick it from the first transaction of month, which is balance at what? At the bank. So we underline then from here we pick, we have a format which we must follow. Then we have the dates. We have a folio. I'm coming. So we have a folio. Euro. So we have a cash. Bank. On the debit, discount allowed. You know what to do. For easy, I'm coming. Without wasting much of your time. What's the name of the company? We need to start with the name of the company first. We have Williams. That's the thing we need to do. So let's start again with Williams. Here we go. This is the format we want to use in preparing a cash book. So the first date we have, which is January 1. You just write your 1 1. Write your 1 1 here. So we have balance BF. What's our balance BF? Let's go to the question. What's our balance BF? We have 68,300 naira. So you move down to, let's go move down to our board, which is what? Is it cash or bank? So let's check. Balance at bank. It means we have 68,300 naira in the bank. So we'll move down back to our listing. Then you write your naira is very important. Then you write your 68. No discounts. One minute, please. Let's move down to this to the second date, which is the same January 1. Dream cash check for 50,000 naira. We withdraw 50,000 naira cash. We withdraw check by what? By getting cash from the bank. Now, looking at this is a contract. This is a contract. Then we have something we call contra entry. What do we mean by contra entry? We have something we call a contra entry. Contra entry means the effect of a transaction that affects two accounts, in which one account set off another account. Here, it doesn't have any effect. What you do is you transfer money from your bank to what? To cash. Now, which one is paying? Which one is what? Which one is receiving? So we want to determine the account that is giving, then the account that is giving, the account that is what? Receiving. Here, drill and cash check for 50,000 naira. We drill, we write a check, then we collect what? 50,000 naira what? Cash. It means the bank is giving, then the what? The cash is what? Is receiving. Now we move to our board. We'll move down to our board. Let's speak from the credit side, the credit aspect. Then we'll say under a particular, it will not be cash. Then under your folio, you put contract, which is C. So the bank is giving how much? The bank is giving 50,000 naira. Then the cash is receiving 50,000 what? 50,000 naira. So we'll move down to bank parts. We say 50,000 naira. Then you come here, you write 1 1. Then we write our bank. So 50. Now, sometimes you may be given a particular statement in your question that withdrew cash for personal what? For personal use. When it's for personal use, then you know that that one is your drawing. So you just on the credit side, you just what? You write you write drawings that will be treated like a drawing whereby the bank is given the next account, you open drawings ledger which will be receiving what? Which will be receiving. Then don't forget your double entry principle, which says for every debit entry, there must be what? A corresponding credit entry. Don't forget. So as move on. So let's look at the next thing. Bought 14 model coats for cash of 28,000 naira, 28,200 naira cash. We purchase 14 model coats. Now this coats, we assume it is what? It is an inventory, not a fixed asset. So we purchase 14 model coats for what? Purchases. Then you know which account is given. Since it's cash, so the cash account is given, which will be credited. Then when we get to purchases ledger, we write purchases will now be that is what? That is receiving. So let's quickly record this. Then we'll continue. So the same date, we write how much. It is the cash that is what we have. So don't forget your naira sign, either debit, you put your debit and what? And credit is compulsory. So we'll move down to the next thing. Other transaction. What's the next one? We have January 3. C Okoli paid 10,000 check on account. So we receive from C Okoli. He paid his account. How do we treat it? It means we goes to C Okoli before. C Okoli owing us 10,000 naira check. 10,000 naira. So he now paid with what? With check. It means when we receive the check, we take it to bank, either to deposit it to what? Bank account, or we get it in cash. But here we receive it, check. So we have to record it under what? Under the bank. So to January 3. Under the debit side, we say C Okoli. What did he pay? He paid a check of how much? 10,000 naira from CO. I hope it's clear. We are sorry for the disconnection that took place. So we are sorry for the break in transmission due to network issue. So can we continue? So we have so 10,000 naira cash. So the next thing we'll do here, we'll move down to the next one. We sold goods for cash to two customers for 3,600 and the other one 3,003. We add the two together and we make it to be our sales. It means the receipt of from two customers. So we move down to about the debit entry. We debit so which dates? That's January 5. January 5. 5. We have 5 1. So we have our sales. So is it which method of payment do we is cash? So that one will be under cash. So we have 6,900. So we'll move down to another transaction. Paid in cash. We paid cash. We paid wages, and we also paid. We incur office expenses of 1,000 naira. So we say the same date. We move down to the credit side. So we now say 5 1. We have our wages. Wages of how much? It was paid in cash. How much is our wages? Our wages is 7,200 naira. The office expenses of 1,000 naira. So it was paid in cash. So 7,200. Then the same date, office expense 1,000 naira. I hope we are following. So the next one is, let's move down to the next slide. We have paid Abiba by check. We paid Abiba by check 2,580. So we have to less 5% what? 5% discount. How do we go about that one? So we calculate the 5%. So calculate 5% of 2,580. 2,580 times 5% will be 5 divided by 100. So that one give us 0.5. So we have 129. We minus 129 from 2,580. So to give us the net amount that will be recorded in our what? In our credit side. Then 129 will be under what? Under discount received. So let's go. So which dates? Discount in January 9. That one took place on it. We have nine one. We paid who? Abibat. We paid Abiba. So just write a 129 here. We made so your 2,580 minus answer. It gives us 2,000. So we have 2,000. Okay, I'm coming. 1 minute, please. Yeah. Okay. I'm sorry for not presenting my dream. I thought I've done. Yeah, we'll move down to before then. I've done two sales to two of our customers. We had two sales to two of our customers for 3,600 naira. When we make sales, it means when we make sales, so two things involved. Number one, the sales is giving out, then the what? The cash is what is receiving. So we have to debit our what? Our cash, then we credit our what? Our sales. So and that's what I did here. We have to debit our sales with what? The addition of 3,600 and 3,300, which give us 6,900. Then the second one is we have a transaction also. We paid wages of 7,200 naira. Then the other one is office expenses. So we have to record this to 1,200. That's about that. Yeah. Made to Abiba 2,000 what? To less it receive with as a discount coming out of 2,000, which is January 10. January 10, we have a cash sales to date of 17,000 naira, 17,600 naira. So this cash sales, since it's sales, so what do we do to sales? We have, based on our double entry principle, whereby we debit the receiver, then we credit the giver. Which account is giving? Sales account is giving, then our cash account is what is receiving. So we move down to our board here. We move down to our board. We have 10, 1. So we say sales. So we have that H Morgan page January 12, H Morgan page check on account of 28,500 after deducting 5% discount. It means this 28,500 is the net amount we receive from H Morgan. So how do we determine the other 5%? What we do here is you get your raw sheet. get your rough sheet. So we now say 5 in my system. So we are sorry for the break in transmission. So let's start by looking at a question on the by looking at a question here. So I'm coming. I want to share with us so here we have a question our questions. The first question is on bank reconciliation statements. So when we talk about bank reconciliation statements, it's a statement being prepared in order to solve the discrepancy that has taken place between the cash book prepared by an organization, which is the bank column of the cash book of the cash book, with the bank statement we received from the bank. Now, looking at bank statement, what do we mean by bank statements to you, based on what you've learned, based on the research you've done? Bank statement is the statement prepared by a bank for their customer, showing the transaction that exists between the bank and the customer within a specific period of time. Now, I believe we all have a bank account, individual bank accounts. Some of us, we have a GT bank accounts, and Zenith bank accounts, UBA bank accounts. So let's say at the end of a month, we want to know those transactions that take place with what? With our account, with the account we have with our individual what? Bank. So this statement will be sent by the bank to show those transactions that take place within what? Within that month. I hope we understand. Now let's talk about what are those things that what are the reasons for the discrepancy between the cash book prepared by an organization and the what? And the bank statement we received from what? From a bank. Number one is unpresented check. Number one is unpresented check. What do we mean by unpresented check? To you, unpresented check are those checks being issued out to a supplier or anybody that rendered a service to the organization, but which are yet to be presented for collection, for the collection of cash from the bank. As at the time of what? As at the time of a reconciliation. I hope we understand. Are you with me? So,
Yes.
another thing is uncredited check. Uncredited check. What do we mean by uncredited check? Uncredited check arises when we've received a check and then as an organization we've deposited this check, but the bank, they are yet to what? They are yet to credit they are yet to credit a bank what? Bank account. As at the time we are preparing what? We are preparing our reconciliation. I hope we understand. We also have standing order. What do we mean by standing order? Standing order arises when the company asks the organization to what? To be paying a sum of money to another party. But as at the time we receive a bank statement, the company, as at the time the company prepares their own record, they do not have the idea about what? The money the deduction being done by the what? By the bank. So when they now receive when the bank statement is being received, that's when that's when it is being reviewed that a particular amount of money has been deducted by the what? By the bank. Also, we have bank charges. This is the amount of money deducted by the bank for the service being rendered by the bank to the what? To their customer. We have direct credits. These are the inflow of money which is being credited by the what? By the bank without the knowledge of the what? Of the business entity. I hope we understand. Are you with me?
Yes.
Then we also have undercasting of what? Of the receipts of the cash book, when the receipt side of the cash book is being undercast by the what? By the person preparing the what? The cash book. Then the dividend received when let's say the organization invested some amount of money in another entity. Then at the end of the period, the entity paid what? Paid dividend into the what? Into the bank account of the company without the knowledge of the what? Without the knowledge of the organization. So when they now receive this bank statement, that it is the bank statement that will reveal that some amount of money has entered into the what? Into the account of the what? Of the organization. I hope we understand. Then we also have dishonor check. What do we mean by dishonor check? This is the check being received by the entity from their customer or clients, but which were rejected by the bank based on some reasons, like let's say irregular signature, insufficient
amount of money in the what, in the customer's account, when irregularity between the what, the amount in figure and the amount in words being written on the what, on the check, and some others. So now let's without wasting much of our time, let's quickly solve this question, then we see how we can solve this bank statement question. Then we have a mark. I hope we understand. So let's start. Let's pick a question. Now, this is a question on bank reconciliation statement. The first thing we need to do is to check the requirements. What is required of us in what? In solving this what? This question. Let's look at our requirements first. So the requirement says we should prepare the adjusted cash book. Then the second part states that starting with balance as per bank statement, prepare bank reconciliation statement for the month ended September 30th 2019. Now they've given us a guide on how to prepare what? On how to prepare a bank statement. They said we should start with what? Balance as per what? As per a bank statement. I hope we understand. The first thing is to prepare our the adjusted cash book. Then the next one is to what? Is to prepare a bank reconciliation statement by starting with what? Balance as per what? Bank statement. Very easy. Just let's now look at the question. Now, I hope we have idea about how to prepare our cash book, how our cash book look like. So our cash book is a T format, a ledger. We have to write is a T format account. So let's move down to our board. Now, let's quickly read our question before we move down to our board. Sorry for. Now let's read. Bank reconciliation statement. The account clerk also needs your assistance as an accountant in order to ensure that the cash book balance of our organization agrees with the bank statement balance for the month ended September 30th 2019. She has provided you with the following summary of banking transactions for the period under review. The first one, a check amounting to 280,000 naira received and paid into the bank was not credited by the bank until after September 30th 2019. Now let's look at the first statement here. A check amounting to what? 280,000 naira received and paid into the bank was not credited by the what? By the bank until after what? 30th September 2019. Now looking at it, this one shows that this is uncredited what? Uncredited check. In our own ledger, which is our cash book, we've recognized this check as what? As a receipt, as an inflow. But the bank has not credited our account as at the end of the what? The end of the month. So let's indicate this as what? Uncredited what? Uncredited check. Now let's look at the next one. The cash book balance of the business showed an overdraft of 200,000 naira. In our own record, we have an overdraft. That is, what do we mean by overdraft? That is the amount we have in the bank. The credit side of our cash book is higher than the debit side, which shows that we don't have any money in the bank. That is, the company is still owing the bank some amount of money. We've withdrawn more than the amount we have in the bank. While the bank statement balance on the same date indicated that the business had a credit balance of 1,930,000 naira. That is, we still have some amount of money in the bank. I hope it's clear. So let's look at this. These are the balances we have in individual accounts. Like the bank statement, the balance as per our bank statement will now be 1,930,000 naira. While that of our own cash book, the balance brought down from our own cash book shows a balance of an overdraft of 200,000 naira, which will be on the credit side. Let's continue. A customer made a direct credit transfer into the business bank account amounting to 1,140,000 naira in settlement of trade debts, and this was not known until after the receipt of of bank statements. Now let's look at this. Which classification can we give this statement? Looking at the reasons for the reasons why there is discrepancy between the cash book prepared by the organization and the bank statement received. This shows that this is a direct credit. We call it credit transfer. Direct credit transfer. So let's note the third one. Then let's continue the next one. A check, which is the fourth aspect. A check amounting to 670,000 naira for the purchase of goods was posted into the cash book as 760,000 naira. A check amounting to 670,000 naira is the actual amount, but when we now want to post it, we post it as 760,000 naira. That one shows cash book error. The only thing we just do is a payment that is outflow of money. So for us to correct this, we have to look at the difference, then we debit back the difference. I hope it's clear. Let's look at the next one. A check of 1,230,000 naira dishonored by the bank remained unreversed in the cash book. A check amounting to 1,230,000 naira dishonored by the bank. Now, this check has not been reversed in our cash book. That one shows a dishonored check. And once it has been dishonored, what do? We've taken it to the bank, but it is the bank that dishonored. Is a check received from one of our customers. So that's a dishonored check, which will be debited back to our cash book. Now let's look at another one. Check amounting to 2,680,000 naira issued to a supplier when we want to reverse the fifth statement, we recognize it as what? Receipt. So the dishonored check will now be on the credit side of our cash book in order to what? In order to cancel the what? The transaction. In order to write off 1,230,000 naira. I hope we understand. Now let's look at the sixth one. Check amounting to 2,680,000 naira issued to a supplier was not presented to bank until October 8, 2019. That one we know that it has not been what? Presented. So that one shows what? Unpresented what? Check. I hope we understand. The seventh part, the bank statement revealed that there was a dividend of 580,000 naira received as investment what? Income. We receive a dividend based on our investment in another company. So that one is dividend. That one will now be debited into our what? Into our cash book. Now the next one here, the bank transferred the sum of 200,000 naira to Ican, being the payment on a standing order for annual subscription of staff who were writing professional examinations. Now that one is standing order. I hope you understand. The company instructed the bank to what? To be paying 200,000 naira to Ican for what? For their staffs who were writing what? Professional what? Exams. That one is what? Standing order. A cash payment of 120,000 naira was posted into the bank column of the what? Of the cash book. It's a cash payment. We made a payment instead of treating it in the what? In the cash column. It was transferred to the what? To the bank column. So we need to do the reversal. By what? By debiting the what? The bank column. So that this transaction will be what? Will be written off. I hope we understand. The 10th aspect. The bank statement indicated that there was charges of 140,000 naira. This being the cost of SMS and other bank charges. So that one is bank charges. Then 11th aspect, which is a check of 630,000 naira deposited by Jide was credited to Deji's account by the bank. That one is error from the what? From the bank. Now let's prepare a bank. The first thing is to prepare what? Adjusted cash book. Then we now what? We now prepare a bank reconciliation statement, starting from the what? Balance as per what? Bank statement. Now let's move down to our board. Let's go to our class. So, what's the name of the company? We were not given the name of the company. So anytime we want to solve a question like this, any accounts, the first thing we need is the name of the company, or the name of the firm, the name of the entity, but we were not given. So that's why we have to scrap that one. Then we'll move down to what? Then we'll prepare So can we move? Here we have a bank the first thing we need to do is adjusted cash book. Sorry, so we prepare adjusted cash book by writing it. So we underline. We have a T format. So a debit. So now let's move down to our question. We need the balance of our cash book because we are preparing what? Adjusted cash book. So the only thing that will remain here, all other transactions we have will be transferred to adjusted cash book except uncredited check and unpresented check, with the error being made by what? By the bank. So others will be transferred to where? To our cash book. So now let's start. We need the balance, our cash book balance. Now for us to get our cash book balance, we need to look at the second statement, which is the cash book balance of the business showed an overdraft of what? 200,000 naira. So when we talk about the overdraft, it means that will be on the credit side. It's a credit balance. We've withdrawn more than what we have in the bank, and that will be a liability on the what? On the company. And then when we look at the principle of double entry, liability, they are always on which side of the ledger? Hello? Based on the principle of double entry, our liability will always be on the which side? Are we following? Hello, everybody. Can we speak?
Hello.
I said based on the principle of double entry, the liability will always be on which side of the ledger?
Credit side.
It will always be on the credit side of the what? Of our ledger. Now let's move down to our board. So our balance brought forward will be here. So we have balance B F. How much? 200,000 naira. I hope it's clear. Then let's move down to the next one. Now let's look at the first statement. Happens to be uncredited check, so we don't need it, so we leave that one. Later on we have to come back to what? To it. We pick uncredited check, which will be used in the preparation of our what? of a bank reconciliation statement. Now let's pick our next one. A customer made a direct credit transfer into the business amounting to 1,140,000 naira in settlement of trade debt, and this was not known until after the receipt of bank statements. So this 1,140,000 naira will be a credit transfer. So, and how do we treat credit transfer? In the bank statement, this has been credited. So, and for every credit entry, there must be what? A corresponding debit entry. And then looking at this is an inflow. Anytime we receive money, we always what? Debit it. We have to debit it on the what? We have to debit it in our what? In our cash book. So coming here, we move down to our cash book. Then we what? We put it on the what? On the debit side as what? Then we write our credit transfer. How much? 1,140,000 naira. Then let's look at the next one. A check amounting to 670,000 naira for the purchase of goods was posted into the cash book as 760,000 naira. So this cash book error. Then how do we treat that? A check amounting to 670 for the purchase of what? Of goods was posted into the what? Into the cash book. Now let's look at the difference between both. We've actually what? We've recorded 760,000 naira into the credit side of our cash book before. Then in order to bring it back to 670, so we have to what? We have to debit with the difference between 760,000 naira and what? And 670, because is what? The check was issued out, and once it's being issued out to our supplier, it shows that there is what? An outflow of what? Of money, which will be on credit side. So let's move down. Now we come down, we call it now what is the difference between 760 and 670? That's 90,000 naira.
90,000.
90,000 naira. Thank you very much. So we have a 90,000 naira here. So that's about that. Then let's look at the next transaction we have. Our next transaction says a check of 1,230,000 naira dishonored by the check remained unreversed in the what? In the cash book. In our cash book before, during the month, we've recorded an inflow of what? 1,230,000 naira. While taking this check to the what? To the bank rejected it. So what do? We have to reverse it. it has been on the debit side. Then for us to reverse, it will now be what? It will now be on the credit side. So let's move that one. We move that one to the what? To the credit side by saying how much? Additional check is 1,230,000 naira. 1,000,000 1,230,000 naira. I hope it's clear. Now let's look at the next transaction we have. Check amounting to 2,680,000 naira 80,000 naira issued to a supplier was presented to the bank on October 8, 2019. That one will be transferred to a bank reconciliation what? Statement. I hope it's clear. Let's
Yes.
move down to the seventh. Now, to the seventh transaction. The bank statement revealed that there was a dividend of 580,000 naira received as what? As investment income. We received a total sum of 580,000 naira based on our investment with another company. That one has been credited to our account, but the bank, our cash book has not been what? Has not been, this transaction has not been inputted in our what? In our cash book. What do? We just, our bank has credited our account. The next thing is to what? Is to debit our own what? Our own account with 500 and what? 580,000 naira. Now let's move down to our so we move down to the debit side, because dividend is an inflow which will always be what? Which will always be on the debit side of our cash book. Then we write how much? That's 580,000 naira. So we move down. Good. Let's move down to the next transaction we have. The eighth transaction says the bank transferred the sum of 200,000 naira to Ican, being the payment on a standing order for annual subscription of staff who were writing professional examinations. So 200,000 happens to be a standing order. So we move down to our solution board. Then we write, it will now be on which side? On which side? Credit side, because it's an
credit side.
Outflow.
Okay.
I hope we understand.
Outflow. Yes, sir.
Which will be on the payment side of our what? Adjusted cash book. Now let's go. Standing order. How much?
200.
That's 200,000 naira.
thousand.
Fine. Then let's move down to the next transaction we have in our question. A cash payment of 120,000 naira was posted to the bank column of the cash book. Is a cash payment, but due to the error of the preparer, it was transferred to the what? To the bank column. What do? We have to reverse. It's on the credit side of our bank column. Then we transfer it to the what? To the what? To the debit side of the what? Of the bank column. Now, what we are preparing is the bank account of what? Of the organization. In the what? In the cash book. So we have to reverse it by moving to the what? To the debit side. And we have to write cash payment. Of how much?
Of 120,000.
Of 120,000 naira. Thank you very much. Good. The next thing is to what? Is to look at the next transaction. The bank indicated that there was a charges of 140,000 naira. This means the cost of SMS and other bank charges. We don't need to waste our time. What we do here is what? What we do here
Bank charges.
is our bank charges. So bank charges is an outflow of what? Of money from our what? From our bank account to the bank. Once it's an outflow, it will be on which side? On the credit side. So we go to our credit side. We write of how much? 140,000 naira. Good. Let's look at the next thing. A check of 630,000 naira deposited by Jide was credited to the Deji's account by the bank. This error from the bank. It was Jide that deposited the amount, so that one will be transferred to what? To our bank reconciliation statement. I hope it's clear. So we have to add it back. We have to add it to what? Balance as per bank statement. So when we get to bank reconciliation statement, it will be added to our bank what? Bank statement. Without wasting much of our time, then let's balance of what we've prepared so far. So now let's have a calculator. Let's pick our calculator to add. So what's the total of our debit of our debit side? Let's pick our calculator and calculate.
One million eight hundred
How
and
much?
10,000. 1,810,000.
1,810,000.
810,000.
What about the credit side?
1,770,000.
1 million. Hello. One
770,000.
1,770,000.
Yes.
Now what's the difference? Which side is higher? The debit side is higher than the credit side. Yes or no? Yes.
Yes.
So our balance carry down will now be on which side? On the credit side.
Credit side.
So we write balance carry down. So the difference between the two is how much?
40,000.
So 40,000 naira. So the total here will be 1,810,000. The total here also will be 1,810,000. Now let's prepare a bank reconciliation statement. Then we write a bank reconciliation statement. For the month ended. Are you with me?
Yes, sir.
Okay. So the first we were being told to start with what? Balance as per bank statement. So we write a balance as per bank statement. What's the amount? How much is our balance as per bank statement?
Balance as per bank statement.
That's
One
our
million nine
bank
hundred thirty
statement
thousand.
balance. We have
1,930,000.
1,930,000. Now, anytime we start with balance as per bank statements, uncredited check which should be deducted from our balance as per cash book will now be added to what? Balance as per what? Bank statement. Then we say add uncredited check. How much is our uncredited check? Let's look at the question. The first thing we have here, the first transaction we have here
20,000.
is our what? Uncredited check.
Credited check.
because we were told that a check amounting to 280,000 naira received and
Was
paid to the
credited.
bank was not what? Was not credited by
Credited.
the bank. So since a bank they've not recognized 280,000 naira, so we need to assist them by adding it to their what? To the balance we have with the bank. I hope you understand.
Yes, sir.
So until after what? 30th September 30 20 what? 2019. So what we do here is we come here, we write we add a 280,000 naira to this, but before then we can, because we have to add another thing to this based on the error being made by the bank. So bank error, the error being made by the bank in our last, a check of 630,000 naira deposited by Jide was credited to Deji's account. In order to recognize this 630, we have to add it to what? We have to add it to our bank statement, so that this 630,000 naira will reflect in our what? Will reflect in our statement. It was the money was credited to a wrong person's account, which will be reversed, which will be debited. You know, it has been credited, so we have to debit this account. Then the corresponding credit entry, we have to come back to our what? To our bank account, to our bank statement. You know, any receipt of money with the bank, with what they do is what? They credit our account from their own side. So here the reversal will now be what? We have to add this back to our what? Bank statement. I hope you understand.
Yes, sir.
Good. So without wasting much of our time, we add bank error. How much? That's 630,000 naira.
630,000.
Good. So let's add it together. What's our total? What's the total?
910,000 naira.
So we have 910. So let's add the two together. What's our total?
2,850,000.
What?
2,850,000
So we have 2 million.
naira.
2 million what?
840,000.
840.
Yes.
So the next thing is to what? We less unpresented what's our unpresented check? How much is our unpresented check? Now let's look at our transaction.
2,680,000.
is how much? 2,680,000 naira.
Wait.
What's the difference? What's the difference?
160,000.
So we have 160,000 naira. As balance. Now let's look at our balance, our adjusted cash book. Do we have the same thing? No. So there is error somewhere.
There's an error somewhere. Yes, under the debit side,
Okay.
the sum total is meant to be 1,930,000, not 1,810,000.
Okay, the total should be
1,930,000.
I'm coming. $1 million. Let me clean this. So is how much?
1,930,000.
1,930,000. So what's now the difference between the two?
160,000.
160,000.
So we get our answer right. I can see someone is raising a hand. I'm coming. So we have one minute, please. $160,000. So this one will be so okay, I'm with you. Your question, ma. Mrs. or Miss Lola Gade Jokas. Do Mrs. Jokas.
I didn't have a question.
Okay, I'm with you.
No, I didn't have a question. I didn't raise my hand. Can you hear me?
I can hear you.
I said I didn't have a question. I didn't raise my hands up.
Okay, but your hand is
Or was that a question? Oh, probably that was a mistake. Sorry.
Okay, no problem. So that's how we solve bank reconciliation statement. Just understand those things you need, and those things, those transactions that will be transferred to your cash adjusted cash book. Then those one that will be what, that will be on the what, on the bank reconciliation statement. The only two items you need, except the error is being made by the bank, the only items you need for your bank reconciliation statement is unpresented check and uncredited check. And then if you are to start with balance as per bank statement, you have to add uncredited check to your balance as per bank statement, whereby you less unpresented check. But if you are to start with balance as per cash book or adjusted cash book, you add unpresented check, then you less what, uncredited check. I hope we understand it. We understand this. Are you with me?
Yes.
Good. Now let's take the second question without wasting much of our time. Our second question here is based on control account. What do we mean by control account? Control account happens to be a memorandum account being prepared to show the total of what, of those, the total we have from our what, from our ledger accounts, based on suppliers, creditors, which are receivables, and what are payables. I hope we understand. Are you with me?
Yes.
Good. So we have a question here on control accounts. So we have two accounts that we have to prepare here, that will be prepared here. We have the receivable control account, which is what, the total transaction that relates to what, to our clients that purchase goods from the company on what, on credit what, basis. Then we also have trade payables control account. That one is based on the transaction that take place between the company and the what, and the supplier on what, on a credit what, terms. I hope we understand. Anything that relates to cash basis will not be recorded there, except the payment of their what, of their debts. Are you with me? Except the payment of what, of their debts, or anything that will reduce the amount of money owed or being owed. That's the only thing we have to that will be on record in our control account. I hope you understand. So let's look at this. The first thing we need to look at is what, is our, the first thing we need to look at is our requirement. Looking at our requirements, the requirement says differentiate between receivables control account and payables what, control account. One. Then the second aspect of it says highlight 4 uses of control accounts. So that's very simple. Then the last ones now give us a transaction being extracted now give us the transaction that take place between the organization and the what and our debtors with our creditors at the end of the what at the end of the period. Are you with me? Are you with me? Now let's differentiate between our receivables control account and what payables control account. Now what do we mean by receivables control account? Receivables control account is the summary amount we have in the general ledgers to our customer. For our customers, the what the summary amount the summary amount we have in what in the general ledgers to what to our we have in the general ledgers for our what for our customers, such as the credit sales, the total collections, the total amount collected from them, total collections from customers, total returns on sales, then receivable owned by the what by the customers. Those are the transactions we have in what in receivables control account. That is the what summary amount we have in the general ledger that relates to what to customers, which include the credit sales, the total credit sales, the total amount goods being sold to our what to our customers, the total amount being owed by the what by our customers, the total collection we have from them, then the total returns given to them we receive from them, then the total receivables we have from returns we get from them because we sold goods to them and they return our goods based on due to some reasons. Then the last one is what the receivables owed by the what by the customers at the end of the period. Then let's look at payables. Payables control account is the summary account in the general ledgers for suppliers. This one is only for suppliers. Then such as total credit purchases. The first one is based on receivables, total credit sales. Now the payables aspect is what total credit purchases, total amount paid to suppliers, the total amount we've paid to our suppliers, also total discount we received, then the total returns given back to our what given to our suppliers, then the total amount owed to what to our supplier at the end of the what at the end of the period. I hope you understand. Are you with me? Then
Yes.
let's look at the uses of control account. Why do we use what are the uses of control accounts to our organization? The first one here is it control account enables an entity. Control account enables what an entity to determine the amount owing to supplier and by the what by the customers. It helps in determining the total amount owing to our suppliers.
Oh,
You have a question? Hello? I'm coming. So let's continue. Now, it helps an entity, the first one, to determine the total amount owing to suppliers and being owed by the what? By customer at the end of the what? At the end of the period. 2, it enable an entity to derive any missing figure in the total amount in the total account. It helps an entity to generate missing figure in the total amount in the total account, such as returns, payment or receipts, etc. It helps in deriving what? Other missing figure in the total account. Another one is what? It enable an entity to detect errors in receivables and payables transactions. It helps in detection of what? In detection of errors in receivables and payables transactions between control accounts, such as checks of the entries in the various what? In the various ledger. It helps in detection of errors in our receivables what? Account. In our receivables and payables what? Transactions. Another one is what? It helps in resolving what? Disputes on the what? Account balances. It helps in what? In resolving disputes. In what? In account balances. The balance we have in our own account may not be the same with the balance our supplier or our customer will have in their own what? In their own account. Because as we are keeping our own record, our supplier or customer, they also have their own what? They also have their own record based on the transaction that transpire between our company and what? And the other entity. I hope it's clear. It helps in resolving what? Disputes. It provides receivables and payables ledger balance quickly to produce a what? A trial balance. It helps in what? In the production to provide receivables and payable balances. Anytime we want to prepare what? We want to prepare a trial balance. Trial balance, it helps in getting what? It helps in getting our balances on receivables and what? And payables. Make omission of fraud difficult because their preparation is separate from the clerk who maintains the individual what? Ledger account. It helps in detection of fraud easily because the preparation will be different from what is being prepared by the clerk who maintains what? Individual ledger. I hope you understand. Now let's move down to our question without wasting much of our time. So we are done with the first two aspects. Now, the Chief Executive Officer, CEO of Favorite Gift Shop buys and sells gift items to both individuals and organizations. The CEO has close personal relationship with her business partners and knows the amount owed to her supplier. In a recent meeting held between the CEO and the auditor, the auditor brought the issue of unavoidable need for the business to maintain the relevant control accounts. The CEO is seriously considering adhering to the auditor's recommendation but need further clarification on the issue. The auditor was to provide the CEO with all the required information. As the accounting officer of the company, you as an accountant, the accounting officer of a company, I would like you to provide me with the following information. Required. Differentiate between receivables control account and payables control account, which has been done. Then you highlight the uses of control accounts. 4 uses of control accounts: detection of error, resolving of what? Disputes. It helps in detection of fraud and others, which has been mentioned before. Now, without wasting much of our time, let's move down to the question proper, which is based on our what? The preparation of our sales ledger control accounts for the period and purchases ledger control accounts for the what? For the period. Now let's start. Now, the following information is extracted from the books of favorite gift shop. We have the sales ledger balances, both debit and credit. We have the both ledger balances, both debit and what? And credit. Then transactions during the month where we have sales day book total, the sales journal being prepared by the organization, the total being generated from the sales day book. We also have bad debts. We have customers check return. We have the purchases day book with the amount. Cash sales. Here, anything on cash basis will not be recorded in what? In our sales ledger control account. The only aspect we have interest in is what? Anything on what? Anything that deals with what? Credit transaction. That is, when goods and services are being delivered, then the payment will be deferred to the what? To the future date. That's what we need here. I hope we understand. So this cash sales will not be in our what? In our sales ledger control account. Return inward day book total, that one will also be needed. Bank draft received, we need it because it will reduce the amount being owed by what? By our customer. Cash paid to customer, cash paid by customers, that one is a missing figure. So after calculating our total, then we have to look for the what? The missing amount. Discount allowed, discount received, SMS alert for check received from customers. That one does not affect our what? Does not affect our sales ledger control account. The only thing we need to do here, the double entry principle. Based on the double entry principle, we have to what? Debit our bank charges, then we credit our bank account as what? As an outflow. I hope we understand. Then draft issued to supplier. We also issued what? A bank draft to our supplier, telling them to what? To get the money from the bank. So this one we what? We reduce the amount, we reduce our payables with our what? With our suppliers. Debit balance in sales ledger transfer to what? Purchases ledger. That one is a contra. And contra is a contra settlement. That is transfer of one account to another. Transfer of an amount from one account to what? To another. This can is allowed to customers for default in early settlement. Early settlement. This can is allowed before we've allowed it. We use this to reduce the amount payables to what? Payables by our customer. So now we have to return it back to what? To the amount being owed by them. I hope you are with me. return outward day book total. That one will reduce the amount we are owing our what our our supplier. Discount withdrawn by supplier. We are given some discounts by our what by our supplier, then petty cash paid to supplier. From our petty cash from our petty cash from our petty floats, we we took some amount of money to what to pay our supplier. So that one will reduce the amount of money being owed to our supplier. I hope it's clear. Then we also have sales ledger control balance, both debit and credit. Then both ledger control balance, both debit and what and credit. Without wasting much of our time, let's move on. Let's quickly solve this by starting with what sales ledger control account. Sales ledger control account. The first thing we need to do, we need to write the name of the company. What's the name of our company? The name of our company is Favorite Gift Shop. So that one will be written here. Then we write the account we want to prepare. That's sales So what do we do here? We have, anytime we want to prepare account, always put your debit by representing it with a DR, then the credit by representing it with a CR. So let's move down to our question. What is our debit balance at the beginning of the period? So we have debit balance and credit balance. That's a balance brought forward. So we move down of 7.2 million and then 45,000 naira. So here we write, if you check in our question, this thing is being rounded up in what? In thousand. So we have balance what's our balance brought forward? On the debit side, we have 7,000 200. The other one is what? 45,000. So we have brought forward. Fine. Without wasting much of our time, let's look at the next thing. So we have transactions during the month where sales day book total. The sales day book total, how do we prepare this? Is based on the total amount of sales being made on what? On credit. So the using the a double entry principle, we have to debit what? Our receivable, then we'll credit our sales. So here we have to debit our what? Sales ledger account by writing credit so we come here, we write credit sales. You write your credit sales. Credit sales of how much? What's our credit sales? Which is being generated from our, that's 105,540. So we have 105,540. Good. The next one, let's look at another thing. Now, we have bad debts. What do we mean by bad debts? Bad debts are irrecoverable debts from our what? From our customer, based on some reasons. Some customers, they may because of they may not have the ability to what? To pay us the amount being owed by them. So the amount being owed will now be transferred to what? To bad debt, which will be written off at the end of the period, in order to reduce the total amount being owed by all our customers. We have to credit this sales ledger contract account with what? With bad debts. So we move down to the credit side. We post this on the credit side in order to reduce. So we now have bad how much is our bad debt? Our bad debt is 3.2. Is 3,200 rather 3,200. Fine. Another transaction. So another transaction is what? Customers check return. Customers check. Some of the customers check were returned. That's a dishonor check. So when customers check were being returned by the bank, so that's dishonor check. So what do? We add it back to their what? To their debts, which will be on the debit what? On the debit side. So we move down to, we've used this check to reduce the amount being owed by them. Now it has been dishonored. What do? We debit their this thing back by saying dishonored what's the amount? That's 3,750. That's at 3,000. Then we move down. The next one says the purchases day book total. We don't need it. That one will be in our what? Creditors and control account. Then cash sales, as I said earlier, is not relevant here because it's based on cash what transaction. What we have interest in is what credit what transaction. So that one will be ignored. The next one is return inward day book total. So that one will be a return inward. So we say so some goods were returned by the what? By so what's the amount of our return inward? What's the amount of our return inward? That's 4,710. Are you with me? Then the next one is what? Let's look at our question. We have bank draft received. We received some bank drafts from our what? From our customer, so that the amount being owed by them will reduce. So once we use that one to reduce the amount, then later that shows what? That shows some amount their money. That one is to reduce their what? The amount being owed by what? By the what? By our customer. So what we do here is we write bank draft received. How much is a bank draft received? We have 13,500. Then let's look at this. The next one here is cash payment to suppliers. Check payment to suppliers. That one is going to our creditors control account. Cash paid by the customers, but is a missing figure. What do we need to do? We have to recognize this. But when we are done with our account, that's when we have to get this what? This missing figure. So let's go by writing it. Then later on, we get the value. We write cash received. We don't know the amount, so we have to look for that one when we are done. We have the cash purchases. That one will not be allowed here. Will not be allowed in this account, and also in our creditors what control account, because what we need here is what credit transaction. I hope it's clear. So let's move down to the next one. Discount allowed. Discount allowed will be treated here. So we write how much is our discount allowed. Our discount allowed is 1,350. Then let's move down to the next thing. Discount received is going to what will be treated in our what in our creditors control account. That's purchases control account. Then SMS alert for check received from customer, we don't need it. Draft issued to supplier, we also give out a bank draft to our supplier, so in order to reduce the amount of money payable to them, so that one will be treated in the other account. Then debit balance in sales ledger transferred to purchases ledger. This is a contra entry. And how do we treat this? It is being transferred from where? From sales ledger. So when we transfer this, it means this contra will be what? Will be on the credit side of our what? Of our sales ledger contra account. Then the other entry will be treated in our what? In the on the debit side of our purchases what? Purchases ledger control account. So let's move down to our board and write purchases ledger, because this will be transferred to purchases. Then we write our contract. Then you can put it in front to be what? C. How much? So that one is what? 780. Are you with me? So do we have any other transaction? Here we have another one to be discount disallowed to customers for default in early settlement. So we've allowed it before, which has reduced the amount being owed by what? By a customer. So in order to reverse it back, that one will now be what? Debited. We have to add it back to their what? To their debt. So how do we do this? We move down to our ledger, then we write discount disallowed on the what? On the debit side. How much? That's 450. So if we look at this thing, we are given both I'm coming o, I need to correct something. It's not on the right place, at the right place. So discount allowed is 1,350 then contra is what, 780. So we have both debit and credit balance at the end of the period. So what we do here, you come to the last aspect as if you want to carry it forward, then you now write your balance brought down, because it's a debit balance, so it must be on the debit side. When you transfer it into the account, it will now be a credit, a balance carried down. I hope we understand. Are you with me? Hello? Are you with me?
Yes.
Good. Now let's continue. So we have, what's our debit balance in our account
116,940
for
naira.
sales ledger?
Yes, the debit side 116,940.
Is 24,765.
Oh, sorry, I thought you were talking about the summation.
No.
Sorry.
The debit balance, that's 24,765.
24,000.
So we have 24,765. Then which will be transferred into account as what? Balance carry down. So being a balance carry down, it will now be 24,765. Are you with me? Then the other one, balance brought down, what's the amount? What is the amount of credit balance? So it will now be, that's 290. So balance carry down of 290. So what will be our total? What's the total here? What's our total? Debit side total. What's our total? What's the debit side total?
We have 117,230.
We have 117
230.
30. What about the credit side?
$48,350.
48,350. So you know the debit side is higher than the what? Credit side. So the difference between the two will now give us the cash received. You know, I told us that we have a missing figure in our what? In our account. Yes or no? And that one relates to what? The cash, the amount of cash being received. So what's the difference between 117,230 and 48,350?
68,880.
We have 68,880. That's the cash received. So you can just put it here. Wow. I hope it's clear. Like your workings. Then we'll move down to the purchases aspect. So we write purchases ledger control accounts. Everything being rounded off in thousand, being rounded up in thousand. Fine. So we have both debit balance and credit balance. Yes or no? So now let's look at our question to check to get our debit balance and credit balance. Here we have the purchases ledger and debit balance to be 100,000, the other one to be 2,910. So we move down to our accounts. So debit balance 100,000, yes or no? Then credit balance 2,000. 1 minute, please. So we have 2,910,000. Are you with me? Now let's continue. Now, what are those transactions that will enter this purchases ledger? The first thing is our total from our day book, purchases day book. That's 94,150. So that one will be treated. So since it's a credit purchases, so that one will be on the credit side. Then we write How much? $94,150. So that one will be 94. Then the next one is we have the cash sales, we don't need it. Return inward daybook, we don't need it. We've done that. We've done something on it. Then bank draft received has been what? Treated. The check payment to suppliers. We paid some suppliers. We give out a check to some of our suppliers of 82,000 naira. That one will be used in reducing the amount the company is owing their what? Their supplier. So what do? We credit it, we debit it on the what? We debit it in our account. So let's go by saying wait oh, where are we? We have check payment to supplier. We were talking about check payment to our supplier. So we paid some amount of, we give out a check to our supplier of 82,000 naira. So that one will be on the debit side. So we now write check of how much? 82,000 naira. So the next one here, the next thing is to what? We have cash paid by customers. That one has been treated. Cash purchases will not be allowed, will not be treated here, but in our what? In our cash book and what? Purchases account. Then the other one is discount allowed, which has been used to reduce our what? To reduce the amount to be paid by what? By our customers. Then discount received. We also receive some discount from our what? From our supplier. So we have to treat that one. Then which will be on the debit side. Then we write how much is our discount received? That's 2,0835. Yes or no? Then let's look at another thing. We have SMS alert for check receipt from customer. Is none of our business. Then draft issued to supplier. We also give out a bank draft to our what? To our customer, so that the amount being owed to our supplier will be what? Will be reduced. So we now write draft issued, bank draft issued. Are you with me? Hello? Good. Bank draft how much? 6,450. So the next one, we move down to our question again. We move down to our question. We move down to the next slide. We have debit balance in sales ledger transfer to where? Transfer to purchases ledger. That's a contract. So we come here, we write, in our sales ledger account, we write purchases ledger. Here it will now be what? It will now be what? Sales ledger by writing in front contract. How much? Oh? That's 780. So the next one is, let's look at our question. We have return outward day book total. That's a return outward day book total. Return outward day book total. That will be our return outward. So we move down, we write return how much? We have 1,000 864. Then we have petty cash. Then before then, let's look at our question. The next thing we have discount withdrawn by supplier. Before we've enjoyed some discount from our supplier, but because we fail to pay these suppliers on time, they have to withdraw their discount, and the amount is 435 naira. 35. So what do? We add it back to what? To the amount being owed to what? To our supplier. So that one is going to our credit side. Break in transmission. So can we continue from where we stop? So we stopped at the return outward. So let's look at our question in order to pick the next item. Now we have discount withdrawn by supplier. As I said earlier, we've received discount from our supplier, but they've promised the company some amount of discount, but because we cannot meet up with the scheduled time on the settlement of the debt to our supplier, so this discount was withdrawn by the supplier. What do? We have to add it back to our what? To the amount to our debt. So what do? We go back to our ledger, then we write, it will now be on the what? On the credit side. So discount, that will now be our discount withdrawn. How much is our discount withdrawn? How much was withdrawn? We have 435. So we write 435. Then the next thing here is what? Petty cash paid to suppliers. Out of our petty cash float, the cash we have at hand for what? For small expenses, small office expenses to be incurred within the company. We took out of those floats in order to settle our what? Our supplier. So that one will be used to reduce our what? The amount the company is what? Is owing their what? Their supplier. So it will now be on the debit side. So we write petty cash paid. How much was paid? That's 100,000 naira. You write 100 because we've round up everything to be what? To be in thousand. So at the end of the period, so we have, now looking at our question, we have both debit and credit balance. So the one on the debit will be at the will be brought down. Then the one on the credit will also be brought down, then transferred back to the what? To the account. The one on the credit will be balance carried down on the debit side. Then the one on the debit will now be balance carried down on the what? On the credit side. So let's quickly do that without wasting much of our time. So we come here, we have a balance brought down, what's the amount? We have 114, then the other one 4,260, 114, then the other one 4,260. The debit being 114, then the credit to be balance brought down of how much? 4,260. So we now transfer it back to the account to be, then before now there is something we need to treat. We are not given return outward. We were not given return outward. So return outward will be cleaned here. We don't know our amounts. We don't know the amount in our as a return outward. So the only what we do here is we do our work back, so we have balance carry down, $4,260. Then the other one, so what's our debit balance? Then let us know our credit balance. What's our debit balance? What's the total on the debit and what's the total on the credit? So addition please. Are we there? What's our debit balance? What's our credit balance, please?
Credit balance is 97,609. Credit 97,609.
97,000.
609.
Then this one will also be 97. So what's our debit balance? What's our debit total like that?
96,525.
We have 96.
1,525.
So what's the difference?
1,084.
What's the difference? So our return outward will be 1,084. I hope it's clear. So that's how we get our answer. Is that clear?
Yes.
So sometimes they may just put missing figure in your question. They want to test if actually you know those items that will be in each of the accounts. So it is now our responsibility to know that okay, this is the account that relates to what? Our sales ledger account, and this is the what? This is the item that will be in what? In our what? Purchases ledger. Just understand it. Anything that will increase the amount of debt to our supplier will be credited. Anything that will reduce the amount of the amount being owed to our supplier should be debited. Likewise, anything that will increase the amount owed by our customer will be debited. Then anything that will reduce the amount being owed by our customer will be on the credit side. So let's have that at the back of what? Our mind. So just know those items that relates to what? Sales. Then those items that relates to what? Purchases. Cash items will not be recorded in sales ledger and purchases ledger control account. What we need is what? Credit what? Transaction. Anything that will reduce the amount or increase the amount of what? The amount being owed to our what? To our supplier will be what? Will be treated in what? Purchases ledger control account, while any amount being owed by our customer will be treated in what? In our sales ledger control account. So that's the end of the second question. Any question? Do we have any question from the house before we
No.
move down to the next one? So let's continue. Here we have we have cash book and ledger with trial balance, but the trial balance aspect and the ledger aspect will not be treated. But I believe we have idea about how to the double using a double entry principle, how we can debit and credit. So using a debit, I believe we remember a double entry principle which says a transaction all transaction must be recorded into what? Into accounts, whereby one will be debited and the other one will be what? Will be credited. That's one. We debit the receiver, we credit the what? The giver. Then for every debit entry there must be corresponding what? Credit entry. I hope we remember that. Likewise, for every credit entry there must also be what? A corresponding debit entry. I hope we remember that. Then also we have classes of our classification of accounts to be in two. One, we have the personal account and we have the impersonal account. What do we mean by personal account? Personal account, this is the account that relates to the transaction that transpire between that take place between the company and the what? And the supplier, between the company with the supplier and the what? And the customer. So that one only records accounts on debtors and what? And creditor. Then we have impersonal account. This is the account that deals with what? Real and accounts and nominal accounts, which does not relate with what? Debtors and creditors what? Transaction. Then we have two types of impersonal accounts. We have the nominal account and the real account. Nominal account is the account that record transactions on income, expenditure, losses and gains. Then real account is the account that record only transaction that relates to what? To tangible assets, the property of the organization, the property of the what? Organization. I hope it's clear. So let's continue. Let's look at our question. I'm coming. Okay, thank you very much. Someone is raising hand. Okay, I'm coming. Okay. I can see someone raising hand.
Sorry, I just want to ask concerning the control we just did now, the balance carried down,
Okay.
the BD. You first treated
Okay.
it as you B before you now brought it as a CD, but the opening balance we didn't treat it like that. Is it applicable to all balances in case they give us balance BD in the question? If it's not
Yes,
control, if it's not control,
it's
if it's not control account, if
the
it's any other.
if it's not control account, any other account, once you are given the opening balance and the closing balance, you have to treat it like that. I hope you
Yes,
understand me.
okay.
So you have, once you have your opening balance, any if the account is a credit account, it will be on the credit side. If it's on debit side, if it's a debit account, it will be on the debit side. Then at the end of the period, once you are given a debit balance at the end of the period, you treat it that way. You treat it like you want to carry it forward to what, another period. Then that balance brought down at the end of the period will now be transferred back to the account as carried down. I hope you understand
Oh, okay.
the logic.
Okay, I got it now, because at times in our bank reconciliation, they used to give us a balance as a cash book balance, balance CD. They say it's a credit balance or the other one, debit balance. No
Okay,
problem. Thank you very much.
you're welcome, sir. So can we continue? Shall we continue? So what we want to do now is cash book, 3-column cash book. So let's look at our requirements first to know where we are going, how to solve the question. Then we move from there to for another question. Now the requirement is the requirement stated here is prepare 3-column cash book to record the above transactions, 20 marks. Without stressing us, what we need to prepare is what, 3-column cash book. So that one is very very easy. Just for us to understand our concepts. Those accounts that will be in the bank column, those accounts that will be on the cash column. Then we must also understand our template, which is our format, the format of what, 3-column cash book. I hope we understand. So let's go. Let's read our question. Williams is a petty trader in Idumota market in Lagos. His transactions are carried out both on cash and through the bank. Daily cash payments are made from cash sales. Daily cash payments are made from cash sales, and any surplus thereafter is paid into the bank either on the same day or days after. The following transactions were extracted from the books of Williams during the period under review 2019. So we have January 1, balance at bank 68,300. We have January 1, that same day, drill and cash check for 50,000 naira. That's for what? For office purpose. But if it's for personal purpose, that one will be at drawings. That one will be treated as what? Drawings. It will be stated in the question that drill and cash check for 50,000 naira for personal purpose. Once it's personal purpose, just know that that's your drawings and you have to credit, then you debit your drawings account in the drawings ledger. I hope you understand. But 14 model codes for 28,000 naira, 28,200 naira cash. That one will be posted on the credit side at the cash column. January 3, C. Okoli paid 10,000 naira check on account. Is a cash receipt. January 5, sold goods for cash to 2 customers at 3,600 and 3,300 respectively. that's cash sales, which will be debited. Then January 5, the same January 5, the same day, paid in cash wages 7,200 naira and office expenses 1,000 naira. That one will be on the credit side. January 9, paid Abiba by check 2,580 naira less 5% discount. The 2,580,000 naira is a gross amount. So once it's gross, we have to deduct our what? Our 5% discount from this amount in order to generate what? This our discount received. The amount of the discount we receive from our what? From our creditor or supplier. So this is a gross amount. We just calculate the 5%, then that 5% will be deducted from 2,580, which will give us the net amount that will be recorded under our what? A bank column. The next one is January 10, cash sales to date. We have a cash and sales to date 17,600. January 12, H Morgan paid check on account 28,500 after deducting 5% what? Discount. This 28,500 is what? Is the net amount. So we have to gross it. Then we deduct our 5% to know the amount of discount given, the amount of discount allowed to what? To our customer. So how do we do this? This 28,500 will be divided by 95%, because if we remove 5% from 100, it will remain how many? 95%. So we just divide it 28,500 divided by 0.95 direct. Then it will give us the gross amount. Then you multiply it by what? 5% to know what? To know the amount of discount given. Then this 28,500 naira will be recorded under the what? The bank column, which will be on the credit side. I hope you understand. Paid carriage in by carriage, paid carriage in cash 3,300. That one will be on the credit side. Paid Musa by check 8,200 and was given 300 naira discount. We paid, how much was paid to Musa? That's 8,200. Then we were given what? 300 naira discount. It means 8,200 is the amount paid. So discount 300 naira is the discount received. This is the net amount. Then 300 naira will be what? Under discount received. Issued check in January 18, issued a check to Nansun account 10,000 naira. That one is being issued out. That one will be under the credit, under the what? Credit side. Cash sales for the week 39,000 naira. The total cash sales for the week 39,000 naira. That one will be debited. David in Kenya paid 25,000 naira by check. Paid into the bank, leaving a balance of 15,000 what? 15,000 naira. He paid 25,000 naira by check. Paid 25 naira by check, which is being paid paid 25,000 naira by check, then paid into bank leaving a balance of 15,000 naira. It was paid into the bank. We received 25,000 naira which was paid into the bank, leaving his balance to be what? 15,000 naira. Then the next one is what? Purchase on cash 7 packets of office pen at 770 naira, 700 naira per packet. So we have to multiply 700 naira times 7 to get the total packets, the total amount of packets we have. Then paid into bank 10,000 what? Paid cash into the bank 10,000 naira. So the first thing we need to do here, what we need to do here is to go to our, what's the name of the company, please? Are you with me? Please, can I hear your response?
Yes.
Good. So let's treat so we want to treat the name of the company. We have Williams. We write Williams. So we have 3-column cash book.
ṣe máa bá wọn sọ wọ́n ṣì wà lórí kíláàsì náà wọ́n ti ṣe kíláàsì lọ́wọ́. ló ó dà pé dátà tán wọ́n máa ń láti kọ̀nẹ́tì pẹ̀lú condition wọ́n á kọ̀nẹ́tì wifi tí wọ́n so breakout máa wà.
So can we continue? So we have 3-column cash book. So we start with our dates. Rule. So we have our folio. Then we have our cash. So discount allowed will be on the debit side. But anytime we want to prepare, anytime we are preparing this discount allowed and the 3-column cash book, we only add any transaction that transpired on any of the discounts. We don't need to look for the difference between discount allowed and discount received. No, because they are like memorandum accounts. So the only thing we need from here is the total amount which will be transferred to the debit side of discount allowed account. Then the credit entry will be treated on the what in will be used in reducing the customers what the customers will be transferred to the customers account, which will be on the credit what on the credit side. I hope you understand. Like how we did the control account, you know, discount allowed happens to be on the credit side. We use it to what to reduce the amount being owed by all the what by all the customer. So here we can put it on the debit side as our what discount allowed. Then let's move on. Then we have the dates. Folio. We have our cash. Then we have bank. Zero money. So we underline everything. Fine. So let's look at our question without wasting much of our time. So we have balance, our bank balance, we have balance as bank to be what? 668,300. This 68,300 will be on the debit side. So under the bank balance, so we have 1 1. Balance brought forward. Under the bank we have 68 300. I hope we understand. Are you with me?
Yeah.
Good. So let's move down to our question. We are told that withdrawing and cash check 50,000 naira. The director, which is Mr. Williams, withdraw 50,000 naira from bank with check. So how do we treat this? This is a contra entry. So the bank is what? Is the one giving, whereas the our cash is the one what? Receiving. So what do? We move down to the credit side. We write 1 1. We have balance. We have cash. Sorry, not balance. So we have the money is going out in form of what? Cash. So it's going to the cash account. Who is paying it? The bank is paying it. How much? How much was being withdrawn? 50,000 naira. So you write your 50,000 naira here. Good. So let's look. Then the bank that the cash that is receiving, you write 1 1. Under your particular, you write your bank, because the money is coming from bank. But in your folio, don't forget your contract. It will tell the examiner that there is a transaction that transpire, that take place between what? Between a single account, which is what? 3-column cash book. So you have to put your what? Contract. So how much? 50,000 naira. I hope we understand. Then let's move down. We are told that C. Okoli paid 10,000 naira check on account. It means C. Okoli paid us 10,000 naira. That's what? That's a receipt. And it's being paid with what? With check. When we receive check from our customer, we take it to bank for the bank to what? To credit our account and withdraw the money from the what? From the customer's account. So we move down to what we do is we move down is a receipt. Which date, please? Okay, that same January 1 we bought 14 model coats for 28,200. Let's treat this before the cash receipt. So we just write 14 model coats, the same date, 2014 model quote. How much is being paid with cash or check? Is being paid with cash, so it will be 28,200. I hope it's clear. Fine. So the next one here is to now treat our what? Cash receipt on check receipt. How much is our check receipt? 10,000 naira. So we treat our check receipt. Which date? We have January 3. So we have 3/1. We have C Okoli. How much? 10,000 naira check. So it will be in our what? $10,000 check. So let's look at another transaction without wasting much of our time. We sold goods for cash to two customers at 3,600 and the other one 3,300. Let's assume even if the customers name were being mentioned, we don't need to write their name. What we need to do is what? We just write sales, because what we did is what? Cash sales. We just debit it with sales, then the corresponding credit entry will be what? Transferred to what? To sales account. So without wasting much of our time, we write January 5. It will be on the debit side. So we have 5/1. You write your sales. Add the two together. 36 plus 33. That will give us 6,900. And we receive it in what? In cash. So what we do here, we write under the cash column $6,900. I hope it's clear. Then we'll move on. Paid in wages. The same date, we paid in wages 7,200 and office expenses 1,000 naira. So we move down to the what? Credit side. Then we treat these two items. So which date? 5/1. Which method do we use in the payment? It's being paid in cash. So we have wages how much is our wages? 7,200. Then the same date, office expenses How much? 1,000 naira. So the next thing here, paid Abiba by check 2,580 naira less 5% discount. Please, what's the 5% discount of 5% of 2,000 of 2,580?
129.
How much?
129.
We have 129. So that one is what? Will be treated as discount received. So which of the dates? That's January 9. So we have 91 H Abiba. So what's now the difference between the discounts? What's the net amount?
2,541.
We have 4,000. Abi 2,000.
2,451.
2,451. Then discount received. What's the discount? 5% discount. What's I'm from you.
One 129.
129. That's our discount received. Then let's move on. It should be 125.
Sorry.
Okay, 129.
Wait.
Sorry, it's 129.
Mhm.
It's 129. It's 129 naira. So let's look at another transaction. Cash sales to date 17,600. January 10. We know that one is a receipt. We just move down to our debit side. 10 1. That will be our sales. How much? It's cash sales. So how much?
$17,600.
So we have 17,600. I hope it's clear. So the next one, January 12, H. Morgan paid check on account 28,500 after deducting 5%. Now, what we do here, we need the gross amount of 28,500 then we deduct our 5%. So what we do here, we move down to January 12, which is a receipt. Then we write 12/1 H. Morgan. The amount is being paid by what? By check. 28,500. So we have 28,500. So what's our discount? For us to get discount, that will be 28,500. 28,500 divided by 0.95. That gives us how much? That's 30,000 naira. Then 5% of it. What's our amount? What is our figure?
1,500.
So we have 1,500 to be our discount allowed.
How do you get 0.95?
0.95. You know, we were told that 5% is our discount. When you remove 5 from 100, what will remain? What do you have as your this thing? That will be 95%. So you just, the figure given divided by 95%, it will give us 30,000 naira. Then apply the 5% on that 30,000 naira to get your discount, the value of your discount. I hope it's clear.
Yeah.
This is what we did. So we have 100 minus 5 give us 95%. Yes or no?
Yeah.
So 28,500, just apply it, divided by, 95% will be 0.95. Yes or no?
Yeah.
So just apply it directly, then you write, then you answer. It will give us 30,000 naira. So 5% of 30,000 naira. 5% of 30,000 naira. So that's what we have. That's the reason why we have. That gives us 1,500. I hope it's clear. I hope it's clear.
Yeah.
Good. Then let's continue. So the next thing we do here is, let's look at our next transaction. We paid carriage of 3,300. Without wasting much of our time, we move down to carriage side, to the debit, to the credit side. Which date? 14. January 14. That will be carriage. By what? By cash. 3300. I hope it's clear. Then another one, paid Musa by check January 18, 8,200 naira was given discount. Discount of how much? 300 naira. So we were given discount of 300 naira by Musa. How do we treat this? The 8,000 naira, 8,200 naira is the net amount we pay, but we've been given 300 naira. So this 8,200 naira will now be in our what? Will be recorded. It was paid Musa by check. We were the one that paid Musa by check. 8,000 what? 200 naira. So we move down to our ledger. We move down to our ledger. Which date? What's our date? That's January 18. Musa by what? By check 8,200. Then the discount we receive from Musa is how much? 300 naira. I hope it's clear. I hope it's clear.
Yeah.
Good. Let's continue. The next one here is issued a check to non-soon account by what? 10,000 naira. We don't need to stress ourselves. So what we do here is we just go to our credit side. We move down to our credit side. What's the date? The date is still January 18. We just write the same date. How much? How do we pay? We pay by check or by cash. It was paid by check.
Yes, 10,000.
So we paid by check, which will be on the bank column. 10,000 naira. Fine. So the next thing, the same date, cash sales of 39,000 naira was received for the week. So we move down that same date. We have a sales, cash sales of 18. How much is our cash sales? 39,000 naira. I hope it's clear. So the next thing we do here is we'll move down to the next one. David Ican paid 25,000 naira by check. Which is being paid into the bank, leaving his balance to be 15,000 naira. He paid 25,000 naira out of 40,000 naira owing. Out of 14,000 naira owing, the man paid us 25,000 naira, leaving his balance to be what? 15,000 naira. So how do we treat this? So how do we treat this? So what we do here is what? We come here, what's the date? January 20. The money was paid by David Ican, 25,000 naira. You come here, write 20. Just write your David because of the space. How much? We have 25,000 naira. So he paid 25,000 naira into the bank. We have 25,000 naira. So the next transaction here is let's look at the next transaction. We have paid on cash 7 packets of office pin at 700 naira per packet. So we'll move down to the credit side. Which of the dates I'm coming? January 21. So we have 21 1 office by what? By cash. It was paid by what? It was paid by cash. So it will now be on the cash what column? 4,900. Abi. So the last transaction here, we were being told that paid cash into bank 10,000 naira. 10,000 naira cash was paid into the bank. So this is a contract. How do we treat this? Which account is paying? Which account is receiving? The cash is paying. Which date? January 22. So you write your 22 1. What's cash paying? The cash is paying into the bank So you write your contra here. How much? I'm coming. Okay. So you come here, 22 1. Cash is being received. How much? 10. $10,000. So don't forget your contract. I hope you understand. So what we need now is to balance our accounts. To balance all the accounts. So here under discount allowed we have 1,500 naira as a total. So at the end of the month, we know January has how many days? 31 days. You write your 31. One balance carry down. So how do we get a balance carry down? We compare the total of debit side with the total of credit side. Then the difference between both will tell us which of the side we have the balance carry down and which of the side with lower value will be the one with what? Balance carry down. Whereas going forward to the next period, with if the balance carry down is on the credit side, so moving forward to the next period, the balance brought down will now be on the debit side. So can we get the total of our cash? What's our cash value?
Cash value for the debit side is 63,500.
Yes. Is how much?
63,500.
So we have 63,500. I'm coming. 63,500 cash. What about bank?
Bank is 141,800.
141,800. So cash for the other side.
For the credit side, 54,600.
We have 54,600. Then bank for the other side.
70,651.
70,651. So what's the balance carried down like that? We know the debit side is higher than the credit side, yes or no?
Yes.
Yes. So what's the difference between 63,500 and 54,600.
8,900.
How much?
8,900.
So 8,000. So what about the bank?
Seventy-one thousand one hundred.
71,149.
149.
So we know this, there is no need of addition of both will give us 429. This one will be 141,800. Then the other one will be 63,500. This one is the same amount. 141,800 will be in the total. I hope we understand. We have the same total here, 63,500. So this one will be 141,800. I hope it's clear.
Yes.
Good. Now let's quickly brush through. I will only explain the next question, then I think on Saturday we have to meet again. We have to meet again on Saturday in order to finish the other three questions. Because we have three questions left. Yes or no? We have a question on single entry, incomplete record, or single entry. We have a question on incomplete record. Question on incomplete record. We have a question on incomplete record. We have a question on accounting for not for profit organization. Then another one. Then for difference between capital and revenue expenditure. So then possibly that same Saturday we have to treat question on financial statement of a sole proprietor. So till Saturday, but let me quickly brush through single and incomplete record. When we talk about incomplete record, this is the statement. This is the record which does not follow the double entry principle. That is, for every transaction, all transaction must give rise to two entries. It does not follow the principle of what? Double entry. We only have the account is only based on one side of what? Of the transaction. The other aspect has been what? Neglected. So how do we prepare financial statement from incomplete record? So the first thing is to what? Is to determine our opening capital. Once we determine that, the requirement will tell us what to do. If is to generate approve it directly and then prepare our statement of financial position. And if not, we will be give we will they we will be given our cash book, our cash account or bank account in order to generate some information which will be used in the preparation of our what of our statement of financial position and a statement of what financial statement of profit or loss, statement of profit or loss. But if the examiner tell us to prepare, they only give us some information relating to the assets and liabilities of the organization. What we need to do is to prepare our opening statement of affairs, then the closing statement of affairs in order to determine our opening capital with the closing capital. So we now compare both capital together by adding any additional capital to our opening capital and subtracting our what? Subtracting our drawings from the opening capital in order to get our profits at the end of the period. But if the examiner asks us to prepare statement of profit or loss, then we were given some information relating to sales and purchases. You know, we have to prepare a control account, and I believe we have idea about how to prepare a control account, both receivables and payables, in order to generate a sales figure which will be a missing figure. All other things will be given, like the bad debt, return inward, and any other information will be given in our question. Then we use that. Once we get our sales value, then our purchases value, then the cash sales and purchases for the period, then we are good to go in preparation of our statement of profit or loss and also statement of financial position. Then the first thing we need to do here, let's look at this question. Let's just have some brief some explanation on it. Then next time we meet, we will treat it proper. Then we'll see how we can generate the financial statement from incomplete record. So here we have the requirements based on what we have been told. The first thing we need to check our requirements to know what we are to prepare at the end of the period before we move down to the body of the question. The first requirement here says calculate sales and purchases, and for us to generate our sales and purchases here, we need our control account. We need to prepare a control account in order to generate our sales and purchases. Then the second one is statement of profit or loss for the year ended. So we need to prepare, once we generate our sales and purchases, for us to prepare statement of profit or loss for the year ended will be easy. Then we need to prepare statement of financial position as at the end of the year. But anytime we get a question like this, the first thing that should come to our mind is statement of affairs at the beginning of the period. That should be the first thing that will come to our mind as our working, in order to determine our opening capital for the period. How do we do this? I believe we can remember our account equation, which says in order to get our asset, we have to add capital with what? With liabilities together in order to generate the total asset for the what? For the period. That says using our accounting equation, we have our assets to be liabilities plus what? Capital or equity. At the elementary level, we can actually use capital, but in professional level we have to use what? Equity. So for us to now determine our capital, so what we need here is our capital. That's why I have to make use of what? Capital. So for us to get our capital, it means it will now be the difference between our assets minus what? Liabilities. I hope it's clear. Are you with me? Are you with me? Good. So for us to get our assets, we had our capital with what? With our liabilities together. And also for us to get our capital, we have to deduct our liabilities from what? From our assets in order to generate the amount invested by who? By the owner of the what? Of the business. I hope it's clear. So in our next class we will discuss much about what? About this incomplete record in our next class.